Hello dear Forex traders, welcome to IFC Markets. You are watching weekly market overview made by IFC Markets. Let's start. The previous week, the Australian dollar outperformed all of its major counterparties. The Aussie clawed back January losses, recovering by 2.26%. It was followed by the euro bouncing up by 1.12% against the US dollar. Next, the Swiss franc and the Canadian dollar jumped by 1.06% and 0.78% respectively, contra the greenback currency. On the negative side, the sterling dropped slightly by 0.15%, immediately followed by the Japanese yen retreating by 0.16%. Nevertheless, the biggest loser of the previous week was the US dollar against the basket of the major currencies, and declined by 0.79%. The best performing currency, the Australian dollar, rebounded after the Reserve Bank of Australia maintained the key rate at 2.50% and said that it would keep rate steady at the time being. Moreover, the kangaroo currency was further supported by unexpectedly better trade balance on Thursday. On the chart, AUD/USD climbed as high as 0.8979, and that is 3.65% higher than 3.5-year lows at 0.8666, representing a more than enough retracement in terms of technical expectations. Thus, we could see our resumption of the downside momentum in the coming week. The euro found support at 1.3476 against the US dollar the previous week. The currency pair managed to refresh its bullish bias, which was triggered by sluggish US employment data and European Central Bank's President Mario Draghi last dovish tone. In addition to that, Germany's Constitutional Court approved ECB's bond buying, spreading optimism. The euro-USD advanced to 1.3643, where it is currently weighted by the daily downtrend. Upside breakthrough is likely followed by a cap at 1.3687. The Canadian gained ground against the US dollar after better than projected jobs report for January. The latter spread expectations that the Bank of Canada may not proceed with rate cut at the next meeting. The US dollar was slightly higher against the Japanese yen at the end of the previous week. The USD JPY went up to resistance at 102.62. The US dollar index was broadly lower against its major peers, mainly due to surprisingly weaker jobs report. The US economy added 113,000 jobs in January, that is far below projections for 185,000. The index declined from cap at 81.30 to 80.53, not able to escape from recently created 81.30 to 79.70 range. Trading pattern. Concerning coming events, on Tuesday, Chinese trade balance and Federal Reserve Chairwoman Janet Yellen first-time testimony will be the major events. On Wednesday, we will be watching Bank of England inflation report. On Thursday, Australia employment report and US retail sales are the most important events. Finally, on Friday, we will monitor Chinese CPI and US industrial production. You are watching Weekly Market Overview by IFC Markets. Do not forget to subscribe to our YouTube channel and follow us every Tuesday. Goodbye.